G'day everyone, another big week at Future Accounting. Hope your week's going well, but yeah, look, the pressure's certainly building everywhere. The fuel situation's well and truly out of control and accelerating at a rapid rate. For many businesses, particularly ag and transport, it's no longer a theoretical problem, it's a real problem, and we're now seeing the flow and effects right through the supply chain. And we're being told by clients that a lot of this Easter trade that they're used to tapping into is all disappearing and changing. So at the same time, there's just so much noise, deafening noise around politics, headlines, a lot of uncertainty, and it's really easy to get dragged into it. But the current environment has highlighted and exposed many of the structural issues and sitting within the Australian economy and the policies that the government are currently rolling out. And we hope that once the dust all settles on this, that there is change. But here's one real key reality: we don't build strong businesses by reacting to noise. We build them by focusing on what we can control in these situations. So as we say, control the controllable. We're heading towards tax reform. And more likely, particularly around the capital gains tax. This has been signalled for some time now, and more than likely an inheritance tax style tax in the future. So for any business under 10 million turnover, there is a genuine opportunity right now to restructure and set up for the future, to improve asset protection, planning for succession, achieving better tax outcomes, and protecting family equity. In most situations, the family equity that can be protected by using these concessions and exemptions is in the millions of dollars. This can all be achieved tax-free, and for farmers, they can also tap into those stamp duty exemptions as well with land restructures. When these concessions and exemptions do change and you haven't acted, it's just a missed opportunity, really. And it's probably going to be a permanent one. So this is a great moment not to sit back, but to step forward, review your structures, restructure where needed, use CGT concessions and stamp duty exemptions while they're still available. Because once these disappear, they're probably gone and the window's going to be shut. The common question is, well, how do we know if they apply to us or not? And probably a pretty simple way to look at this is to consider, first of all, do you qualify under the turnover? Is your turnover below $10 million? If it is, you do qualify. Do you have assets in your personal name still, both business and operations and business property, for example? Are business assets and property held in the same entity where risk and value should be separated for asset protection, succession planning options in the future? They're the types of things to look at. So this week's articles reinforce exactly where attention is needed. Superannuation caps are increasing from the 1st of July, but the real opportunity is before the 30th of June. So have a look at that one. Interest rates aren't the real issue. Policy direction is having the bigger impact. Apologies for my frustration that probably gleams from this article, but it's sort of really frustrating what's going on at the moment, and it's damaging family business. We also got an article on Division 296, superannuation, but we need to start planning with that. Catherine's all over it, and she'll be sharing further insights on this in the very near future. So it's important just to sort of fully understand what's going on with all this other stuff on the sidelines happening. So make sure you have a good read of those articles. Thanks for watching. Don't hesitate to reach out if you want to know more on any of this information, and have a great weekend. Thank you.